Hey all, today I'm going to be updating you on the housing market crash of 2020. This video covers the UK, the US, Canada and Australia mostly, but I suppose is also applicable worldwide based on the current world circumstances. In this video I'm going to be looking at the data recently released and comparing it to the data from a few months ago to see if we can get to the bottom of whether the housing market is really about to crash. If you enjoy this video or find it useful, be sure to drop a like down below and subscribe to the channel if you haven't already. Now let's get into it. So to start with, let's look at the current housing sales activity. And the FT shows that in the first week of June, sales were 12% higher than back in March, which was the start of the lockdown. And also they were 17% higher than this time last year, which is an absolutely massive increase in volume. But I suppose a lot of it is going to be due to the fact that there weren't many house sales being processed in April and May, so it's kind of playing catch up from back then. And it seems that so far, a lot of wealthier buyers are already getting back into the market, as comparatively there's been a lot more homes sold valued at 500,000 and above, compared to homes sold valued at 200,000 and below. And the data shows that these wealthier buyers are picking up average discounts between 5 and 10% per property. But to me, this suggests that the housing market isn't necessarily crashing, but that it's wealthier buyers or wealthier investors taking advantage of people that are needing to sell their homes or are panic selling and willing to take a discount. Now, are these people selling their homes the ones getting played, or are they really the intelligent ones selling their homes just before the big crash? And interestingly, we're seeing some conflicting data going on as well. Last week, Nationwide said that house prices are falling at the fastest rate since 2008, with a 1.7% drop in average house sale price in May alone. But comparatively, Zoopla are saying that in the first week of June, house prices increased by 6% compared to this time last year. So maybe the big housing market crash already happened in May, and we're starting to recover already. Or maybe we're just getting set for another tumble. I think it's quite hard to tell at the moment because the data won't exactly be conclusive. Because we're in such unusual worldwide circumstances at the moment, the data is likely to be a bit anomalous. There's not really going to be that many normal people wanting to buy a house at the moment and go through the whole process of moving during the crisis. Therefore, it's likely that the people wanting to buy at the moment are going to be wealthy investors looking for a great deal. And therefore, the average offer price on a house is going to be much lower than usual at the moment. And there's also not going to be many usual people selling at the moment because they won't want to move out during the current crisis unless they get the offer price that they wanted or an offer price even higher than they were expecting. They're probably not likely to take a discount and take a risk on moving out. And therefore it's likely that most of the people selling their houses at the moment are going to be those that are being forced to sell because they can't afford their mortgage repayments, for example. And therefore the properties that are sold are going to be sold at a much higher discount compared to usual, because it's going to be people being forced to sell at a discount and the buyers are going to be wealthy investors getting a good deal. And the combination of these two, being wealthy investors that are trying to secure a deal and also people that are being forced to sell their properties at a discount, probably means the data isn't 100% reliable. And it's also based on reduced sales volume in March, April, May and the first week of June. And these sales are kind of almost like distress sales compared to regular sales. But obviously that is just my opinion. I don't think we'll see true meaningful data until after the crisis has passed and regular sales activity picks back up. Only then will we be able to examine the true impact of the crisis on the housing market. And I think this all boils down to what happens and what is happening with unemployment, furlough, the stock market, cure progression, the general worldwide situation in terms of countries relaxing lockdown measures, and also general business performance. So let's talk about some of that, shall we? Now, I think it's fairly well agreed upon that unemployment is what potentially would crash the housing market. If millions and millions of people become unemployed, they won't be able to afford the mortgage repayments for their property, and their property will be taken away because they've defaulted on the mortgage and put onto the market. That way you'll see millions and millions of properties flood onto the market, but also the demand won't be there either because obviously people won't be able to afford to buy a new property with no job. And this is what will crash the housing market, similar to 2008 or potentially even worse. In my last video, I said that in April, US unemployment had risen from 4 to 14%, or 20 million people. and the expectations were that for May, unemployment would rise to 20 million people, or an additional 8 million jobs lost. But actually, unemployment reduced to 13%, which means that the US actually employed 2.5 million more people, which means that actually, in the US, the unemployment situation is getting better instead of worse, which means there's not going to be as many people defaulting on their mortgages and not as many homes flooding onto the market, which means that there's also going to be more people able to go out and buy homes, causing the demand to increase and the supply to be less, meaning that hopefully there isn't going to be a crash, or the crash isn't going to be as big as expected. In the UK, these figures are released quarterly instead of monthly, so we haven't really seen the impact of the crisis yet on unemployment. But also because of furlough measures, which is where employees in the UK are still getting paid a salary by the government because they can't work, it's unlikely that job losses are going to have increased too much. If you've enjoyed the video so far, then be sure to leave a comment down below letting me know what you think is going to happen to the housing market and whether you think the housing market is about to crash. But it will be interesting to see what happens to unemployment when the government do start reeling back these furlough measures. From August, the government are going to stop supporting NI and pension contributions, but they're going to continue to support salaries until kind of like September, October time. And obviously if the lockdown measures haven't lifted by then, I really do expect that we would see a giant spike in unemployment. Now some of you might be asking that even if lockdown measures are lifted, won't we still see huge amounts of job losses? And I suppose this depends on the business market and businesses themselves. Now there have been a lot of high profile bankruptcies in the last few weeks. There's been Debenhams, Flybe, Hertz, JCPenney and many more. And these companies will obviously have taken a lot of jobs with them. But let's look into it a little bit deeper, shall we? Now Hertz had a net debt of 18 billion. And what this means is that if you totaled up all of the assets that the company owned and all of the liabilities that it owed to other people, the liabilities would exceed the assets by 18 billion. This is the equivalent of having £0 in your bank account, but somebody wants you to pay them 18 billion. It's just not going to happen. JCPenney had 4.2 billion in net debt. Flybe also had 80 million in net debt, and Debenhams had 286 million in net debt. And the list just goes on. And therefore these companies were kind of just teetering on the edge of bankruptcy anyway, and it's likely that even without the crisis, they were going to go bankrupt. And it's also likely that most companies out there aren't teetering on the edge of bankruptcy like this, so probably won't go bankrupt because they're obviously solid business models. So when the lockdown is lifted and everyone goes back to work, all these other companies are just going to continue generating sales and continue generating profits. It's just going to be those kind of companies that were teetering on the edge of bankruptcy anyway that are going to go under. So obviously while employment is going to increase, it's not going to be massive, providing that the lockdown is obviously lifted before the furlough scheme expires. But what about cure progression, and how are lockdown measures going so far? Well, New Zealand actually just announced complete relaxation of all of their lockdown measures because they think they've pretty much completely eradicated the virus. In the US, there's also been partial relaxation of the lockdown measures, and there's more and more states that are opening up their economy and allowing people back to work. And in the UK, it's just been announced that all shops are going to open again. And as the UK and the US and everywhere else continues to open up places of work, the risk of massive spikes in job losses reduces, and therefore unemployment goes back to normal levels of around 3 to 4%. And this effectively reduces the risk of the housing market crashing because unemployment starts improving. Unless, of course, there's a second wave and the world re-enters lockdown all over again. If you've made it this far into the video, then be sure to subscribe to the channel and watch more videos in this series of market crash related content. Now, what actually are the chances that we enter a second lockdown? And has anything changed recently that could cause a second wave? And I've got some thoughts about this. But before I share these thoughts, I just want to say that I do support the Black Lives Matter movement. I think that all people and all races should be equal. And I think it's quite easy to see that so far that's not the case. And therefore Black lives need to matter more so that in future all lives can then matter equally. And as a result of this movement, there's been a lot of protests going on all over the world. And it's currently unknown whether the social distancing measures that have been put in place have been followed at each of these protests. And obviously if they haven't, then we could definitely be in for a second wave. The impact of any large-scale breach in these social distancing rules isn't really known at the moment because obviously it hasn't happened, but I definitely think it could cause the infection numbers and the death numbers to rise again. And obviously if these infection numbers and the death numbers do rise again, then the UK, the US and the rest of the world could definitely enter a second lockdown, especially if the virus goes back overseas to countries that have practically already eradicated the virus. And obviously if we enter a second lockdown, it means that all these businesses are going to have to shut again. And then it means all these businesses are going to start struggling more and more, and then more businesses are going to get tipped over the edge into bankruptcy. And then it's obviously just going to snowball really, because more bankruptcy causes more unemployment, and more unemployment causes more defaults on mortgages, and more defaults on mortgages causes more properties going onto the market, and also people not being able to buy these properties, which will effectively cause the housing market to crash. But obviously all of this is just my opinion, and I'm not a financial advisor, I'm just some guy that makes videos on YouTube. And obviously if anything, I am a little bit biased towards the housing market not crashing because I'm a property investor. So do take everything I say with a pinch of salt. And as always guys, if you've enjoyed this video, then be sure to watch some of my other videos. Alternatively, subscribe to the channel and ding the notification bell. That way you'll be alerted when I upload a new video. Cheers.